Good morning. This is Horizons Middle East and Africa. Our top stories this morning. OPEC Plus ministers meet here in Riyadh, agreeing to extend production cuts while laying out a 12-month timeline to bring some barrels back online. Sold out. Saudi Aramco's latest $12 billion stock offer selling out within hours of the deal opening on Sunday. And coalition talks begin in South Africa after the ANC fails to regain a parliamentary majority, losing power for the first time in 3 decades.
What this election has made plain is that the people of South Africa expect their leaders to work together to meet their needs.
Well, it's just gone 8 a.m. across the Emirates. It is 7 a.m. over here in Dubai. And if you're wondering why I am in Riyadh, I should say, the reason I'm in Saudi Arabia is because so much has been happening in Riyadh over the last 24 hours. We talk about that Aramco book building. We also talk about that OPEC Plus meeting, half virtual, half in person. Some big announcements coming out of the meeting yesterday. We will get into all of that throughout the course of the show. But as ever, let me just kick off by taking a look at how markets have been faring over the course of today's trading session and, of course, Friday's trading session, with that PCE print coming in line with expectations. And what we did see right afterwards is a slight dip in the S&P. That changed towards the last 15 minutes of the trading session, with S&P managing to spike up. And today futures are leaning towards a positive, seen opening up in the green, up about 0.25%. 10-year yields also in focus, 4.5%, just shy of that 4.49 is where we're sitting right now. We're about 1.5 basis points lower. We did, of course, rally around 5 basis points after that PCE print came out on Friday afternoon. Dollar index trading sideways, I would say slightly weaker to the tune of 5 basis points. And, of course, Brent, lots of eyes on how the oil complex was going to react to those set of announcements by OPEC Plus yesterday. And here you can see, well, it hasn't done much. Brent is trading sideways as well, around $81. We whipsawed a bit during the session, slightly lower, slightly higher. But at the end of the day, we are trading sideways as the market digests what these announcements mean in terms of the group extension to the end of 2025 and the voluntary cut extension to end of Q3 of this year, with a gradual phase out over the next 12 months. And here you can see that Brent, if you zoom out, is still stuck in that $80 to $85 range. The question is, will we break out to the downside or possibly to the upside? So far, we've been moving sideways. So let's get back to this top story. OPEC Plus nations meeting here in Riyadh over the weekend and resolving to extend production cuts as they seek to bolster a fragile oil market. Ministers also agreed to begin bringing back some oil as early as October this year. Production curbs will continue in full in the third quarter and then be gradually phased out over the following 12 months. The agreement aims to keep supporting oil prices while also easing concerns of some members, such as the UAE, about continued restraints. Oil initially extended losses on the plan, with Brent dropping below $81 a barrel right now, as we spoke about, sitting at around 81 exactly. So let's bring in Anthony DePaolo, our Middle East energy markets reporter. Well, Anthony, you were very busy yesterday trying to piece together all of the information that we were getting from OPEC Plus. And I've got to say, the complexity of the existing cuts doesn't really add to the market being able to piece together what we got from them. But it feels as though market participants are very much focused on what OPEC Plus decided to do with those voluntary cuts. So talk us through that.
Yeah, Joanna, good morning. As you say, it was complex, and it wasn't an easy task for them because they did go in with such a complex set of quotas and reductions to deal with. As you said, there was that group-wide cut that had been instituted for a number of years now, that's extended all the way through 2025. More or less the voluntary cuts, with some, whereby some countries decided to reduce their production on a voluntary basis. Those are largely extended through next year. One level, though, is going to start being unwound at the end of the third quarter. So OPEC Plus will keep everything intact as it is now through the third quarter. Largely, analysts were expecting that the cuts would be extended through the end of the year. So some of that extension was expected, but what is causing kind of that ambivalence in the market is that fourth quarter letting up, bringing some of that production back into the market as those countries try to gain back some share. And so that is what's causing some of that ambivalence, with some of the analysts saying that that's a bearish impact, Jemima.
Yeah, well, there's one line I think that OPEC really wanted to emphasize, and that is the, quote, subject to market conditions. They said that they will start winding down or phasing out those voluntary curbs as of Q3 or the end of Q3 of this year, but also subject to market conditions. So from my perspective, I read that as them still maintaining the flexibility not to continue with the phase out if they think that market conditions have changed.
Well, one of the things that some of the ministers stressed to us, we spoke briefly with the UAE minister, Suhail Al-Mazroui, after the meeting, and the Saudi energy minister, Prince Abdulaziz bin Salman. And both of them said that this idea is a plan to bring some balance to the market, keep the balance currently that we have in the market, and give some kind of forward view as to what could happen with production. So we have that long forward view, but that real bit of flexibility whereby OPEC can come back in and decide to slow those cuts or to reverse some of those cuts. So we can see them reacting to market share. And what OPEC is really going to be watching over these next couple of months is if they are able to pull down the amount of oil in storage, those inventories. That's something that they really watch, because oil in storage can be a cap on the price. If prices go up too high, that oil comes out of storage, brings the price back down. So they want to make sure that that's to a lower level. They're also really watching this U.S. central bank, inflation and interest rates, because that makes oil priced in dollars more expensive for a lot of developing countries. So those things they're really watching. They'll watch the summer period, which is really a peak demand period for users in the Northern Hemisphere, Europe and the U.S., to see if those inventories come down and give them a good situation going into the fourth quarter where they can start to add some of those barrels back. So that's really what they're going to be watching intensely over this next quarter to see if they can continue with that plan as laid out yesterday, John.
And of course, their own forecast for oil demand growth is pretty high compared to other agencies. Anthony, thank you so much for giving us an overview of what went down at OPEC+. Anthony DePaula, our Middle East energy markets reporter. And we will get more on oil and the analysis on the decision to extend its output production cuts with Crystol Energy. Their CEO, Carole Nakhle, joins us shortly. Now, our other top story from the weekend, Israel is pushing back on a fresh ceasefire proposal, which the U.S. said could mark a decisive moment in the conflict. President Biden laid out a three-phase plan on Friday that he said was Israel's, starting with a 6-week truce involving hostage prisoner exchanges and increased aid, followed by a focus on a permanent ceasefire and the removal of Israeli forces from Gaza, and finally, major reconstruction. So let's discuss this with Kim Ghattas. She's the author of the book Black Wave and an erudite of the region. Thank you so much for joining us this morning, Kim. Let's just start with this Biden proposal that came through on Friday. I thought it was really interesting piecing together the commentary that we've got from various Israeli officials over the weekend. Netanyahu saying a permanent ceasefire is a non-starter. His right-wing coalition partners threatening to leave the government if he agrees to the outline. So it very much feels like if the Prime Minister actually goes along with this plan, he could be putting his own political career at risk.
Good morning, Jemima. It's great to be with you. Yes, it's been fascinating to watch the commentary coming out of Israel, or the reactions rather coming out of Israel, both from the government itself and the various members. As you said, the far-right members saying that if Prime Minister Netanyahu takes this deal, they'll be walking out. But you have, of course, his war cabinet members like Benny Gantz saying that if Prime Minister Netanyahu does not go forward with a vision for the day after in Gaza, he will leave the war cabinet by June 8th. That was a move that preceded President Biden's announcement on Friday. And at the same time, you've had massive demonstrations on the streets of Tel Aviv by Israelis saying, take the deal, enough with the war. And take the deal are the words that President Biden himself used in his announcement on Friday. Now, a lot of commentary is also saying that the onus is now on Hamas to accept the deal. That's also how Americans are putting it, American officials are putting it. But remember, Hamas had already agreed to a deal a few weeks ago, which we think is the same as what President Biden put out, which we also think is the same as Prime Minister Netanyahu put to his war cabinet. Whose deal it is in the end doesn't matter. President Biden put this forward. He's putting pressure on both the Israelis and, to the extent that he can, put pressure on Hamas through the Qataris to take this deal. A lot of commentary are saying this is the latest plan. I really think it's the last option possible to try to go onto a more positive trajectory. Otherwise, we're facing months of war.
Well, here's what I was going to say to that point. I thought it was really interesting that a joint statement was put out on Friday by U.S., Qatar, and Egypt, the three main mediators, urging both sides to accept the terms of the deal. And I just wonder if Israel, Netanyahu reject the deal, does it mean that the diplomatic avenue has run its course?
To a great extent, I think yes, and that's the danger with President Biden's very sort of high-stake gamble, to go above Netanyahu's head and address the Israeli public directly. Because I think that the most important sentence in President Biden's address was, I ask you to take a step back and consider this moment, he said, addressing the Israelis. This is a deal that allows the reintegration or the integration of Israel into the region in the long term. This is a different path than war until victory, which your prime minister is putting forward. Now, if Prime Minister Netanyahu takes the deal, his far-right ministers will indeed step down and potentially bring down the government. But there is an option, a possibility looming on the horizon, that he could put together another broad-based coalition that would include the Minister of Defense, Yoav Gallant, Benny Gantz, and others who want to support this deal. And so it becomes about the math that you have to do in the Knesset to change the 65-person coalition that he has into a different one, which would allow him to form a new government.
Kim, just final question to wrap things up here. I think there was a moment a couple of weeks ago when people thought that maybe the U.S. would think of that so-called red line after the attacks on the Rafah encampment and potentially think about pausing the shipment of military equipment. And post Rafah, the White House were quick to say that they did not deem that the red line had been crossed. To what extent do you think the U.S. are weighing up here the possibility of actually pausing the distribution of shipments in order to get this ceasefire across the line?
President Biden has tried to walk this very fine line between saying that Israel has the right to defend itself, that they will never abandon it, but at the same time trying to signal that there are some limits. But listen, I mean, since the beginning of the year, the Americans have been saying, the Israelis are going to wrap up operations by the end of January, February. This campaign will stop after this. This campaign will stop after that. And clearly, the pressure that they've tried to put to bear on Netanyahu has not delivered. The bear hug that President Biden gave Benjamin Netanyahu after the events of October 7th did not lead to the results that President Biden was hoping for. Now, indeed, he could have put a lot more pressure on Netanyahu. He has chosen not to. And that's why I think it's interesting that what he's done now is deploy the capital, the other part of the capital that he gained when he traveled to Israel after in October, which is to deploy the capital that he gained with the Israeli public and appeal directly to them to take this deal and put pressure on their government to take this deal.
Yeah, so interesting. Kim, real pleasure to have you on our show this morning. That was Kim Ghattas.
Thanks for having me.
Author of Black Wave. Still ahead on our show as well, South Africa's ANC begins talks with rivals to form a government following its worst performance since Nelson Mandela led it to power at the end of apartheid. Details shortly. But first, the IATA AGM and World Air Transport Summit to discuss key issues facing the travel industry. We're live from Dubai next. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi over here in Riyadh today. Now, IATA Director General Willie Walsh says supply chain issues that have held up the delivery of new aircraft around the world could stretch into 2026. He spoke to Bloomberg's Guy Johnson at the association's annual meetings in Dubai.
In the past, we used to have to deal with a delay of a month, maybe 2 months. But now we're seeing, delays of several months, or indeed in some cases years. So I think this has now been factored in. I think airlines' ambitions in terms of growth have been tempered as a result of the uncertainty around supply.
Well, let's cross over to that AGM and Bloomberg Markets Today anchor Guy Johnson. Good morning to you, Guy. It's good to see you in Dubai, in our region. I just want to, speak about that segment that we were just listening to from Willie Walsh, talking about some of the delivery delays in the industry. And it seems like airlines are really struggling to get not just the engines that they need, but also the airlines that they need. To what extent is that looming large over how the airline sees things over the next couple of years? And ultimately, is it a good thing or a bad thing for profitability?
Jumana, that last question is absolutely fantastic because for some airlines, this is a genuine problem. Remember, if you're a Boeing customer, you can't get the Boeing aircraft that you want. Well-documented reasons for that, but also it's affecting Airbus aircraft as well because of the problems with the Pratt & Whitney engines that they're seeing. So for some airlines, this is a genuine problem. But for others, and Willie Walsh was talking about this to me yesterday, this actually may turn out in the long term to be a positive because what it's going to mean is that these airlines can't grow maybe quite as fast as they would hope for, but actually what that will mean is that that will impose some capital discipline, i.e. we're not going to end up maybe with a big kind of peak and then a trough for the industry as demand starts to fall away and too many aircraft come into the market. So in some ways, and I know many airlines here don't see it this way, this could actually be a really big positive for this industry going forward from here. Maybe just throttling back some of that really exuberant growth that we're seeing at the moment. In terms of the timeline, you were just talking about how long this could last for. I was talking to Sir Tim Clark yesterday. He was referencing this idea that we could see a 5-year trajectory for Boeing to get back on track. Others I've been talking to here maybe suggesting that it won't take quite so long for Boeing to get back on track, but certainly there is an expectation that this shortage of aircraft is going to be with us for really quite some time. We've got some great guests lined up over the next day or so, Jumana. In the next hour, well, actually fairly shortly within this hour, I'm going to be speaking to Antonaoaldo Neves. He is the CEO of Etihad. The key question there, are we about to see the first IPO of a major Gulf carrier? We will get an answer to that question very, very shortly. Jumana, back to you in Riyadh.
Exciting stuff, Guy. Also very interesting, I guess, positive take on some of these delivery delays and what that means for the industry. Fascinating. Guy Johnson live from Dubai this morning. Also coming up on our show, oil is swinging between gains and losses as OPEC Plus members gather here in Riyadh. We discuss next what is causing this uncertainty in the fragile oil market. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi here in Riyadh today. Oil is swinging between gains and losses after OPEC Plus set out a plan to restore some production as early as October. The Saudi Energy Ministry says production curbs will continue in full in the third quarter and then be gradually phased out over the next 12 months. Let's bring in Carole Nakhle, the Crystol Energy CEO. Good morning to you, Carole. Good to see you. I've read plenty of analyst commentaries that have come out the last 24 hours, and I've got to say it feels as though the community is pretty divided. Those in the bullish camp think that the discipline, the visibility about the cuts towards end of 2025 is a good thing for the market, and those in the bearish camp are surprised to see some barrels being brought back to the market as soon as 2024. Where do you stand in the debate?
I understand why the debate has emerged, because this OPEC Plus meeting has been perhaps one of the most challenging, arithmetically speaking, but it all depends on what you are focusing your attention on. Because remember, there are 3 layers of production cuts that have been introduced by OPEC Plus since 2022, starting with the official cuts for the whole group of 2 million barrels a day. Those cuts have been extended until December 2025. And then there are 2 sub-layers of voluntary cuts. The first one introduced in April 2023 by 9 members. Those will be, they are of 55 million barrels a day. And those would be also extended until December 2025. So in that respect, we are seeing extension of the cuts until end of 2025. But there is one more layer of voluntary cuts, and they were introduced in November 2023, and they also include the 1 million barrels a day Saudi lollipop to the market back then when it was announced, and they amount to 2.2 million barrels a day. Those cuts are going to stay in place until September this year. But as of the 4th quarter of this year, they are going to be gradually phased out on a monthly basis. So they published already the schedule who will be cutting, increasing more by how much every month until September 2025. So if you take that into consideration, you can actually see it differently. You can see that actually there's more barrels coming to the market from the 4th quarter of this year. And in that respect, it can send bearish signals to the market.
Yeah, and how do we think about the decision in the context of non-OPEC supply that's coming through from the likes of US and others?
This has been, since the shale revolution started in the US, this has been the main challenging factor that OPEC and later on OPEC Plus has faced. And this is a supply that responds to prices, and it has surprised many in the sense that it has proven to be very resilient. And we continue to see record production levels from the US coming to the market. And especially this year, the US has led the non-OPEC Plus supply growth, and is likely to continue to be leading that non-US supply, non-OPEC Plus supply growth for several years to come. And also there are other production coming from Guyana, Norway, Brazil, but they are not as flexible in terms of responding to prices as we see with the US shale. So I think that is probably one of the main factors on the supply side that OPEC Plus has taken into consideration when thinking about market share, because while OPEC Plus has been losing market share because of production cuts, the US has been gaining market share.
Yeah, Carole, unfortunately, we're going to have to leave it there, but very valuable to think about, the various swing suppliers to this market. And of course, don't forget that UAE were actually granted extra production in 2025. That was Carole Nakhle, the Crystol Energy CEO. Plenty more ahead on Horizons Middle East and Africa. We'll be back in just a few moments. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. OPEC Plus ministers meet here in Riyadh, agreeing to extend production cuts while laying out a 12-month timeline to bring some barrels back online. Sold out, Saudi Aramco's latest $12 billion stock offer, selling out within hours of the deal opening on Sunday. And coalition talks begin in South Africa after the ANC fails to regain a parliamentary majority, losing power for the first time in 3 decades.
What this election has made plain is that the people of South Africa expect their leaders to work together to meet their needs.
Well, good morning again, everybody. It is 8:30 a.m. in the Emirates. It is 7:30 a.m. over here in Riyadh. Lots of news coming out of Riyadh in the last 24 hours. We're going to talk about the Aramco book building in addition to OPEC Plus in a few moments. A quick look at how some of the key assets have traded in the last couple of trading days. And of course, Friday was month end, so don't forget that. We had that PCE number come out in line with expectations, which saw markets dip a little bit afterwards. But towards the close, we did see a ramping up of activity. Surprise, 15-minute scramble towards the end of the day. The S&P closing higher. Today, you can see futures are trading slightly in the green, leaning towards a positive open. 10-year treasuries also sitting just below 4.5 here. So we've rallied about 1.5 basis points, 5 basis points lower throughout the course of the day on Friday. Dollar not doing a lot, though slightly weaker. And then Brent obviously in focus after that OPEC Plus announcement came out yesterday afternoon. And what we have seen is a bit of a volatile session. At some points, Brent was trading weaker, then firmer. Now you can see we are sitting at around $81. That $81 is bang, well, in the middle or toward the bottom of this $80 to $85 range that Brent has been stuck in the last couple of months. Will it break to the downside? We have to see. But so far, initial indicators from the market suggest that whatever OPEC announced yesterday is enough to keep this supply under check. So something worth bearing in mind. All right, let's also get a check in how markets in Asia are faring. Avril Hong is in our Singapore studio standing by. Avril, what are you watching this morning?
Yeah, Jumana, we're watching a number of positive developments for markets at least, whether it's Fed rate cut optimism or China data on the private survey showing manufacturing growth at the fastest pace in about 2 years. And we also have the likes of NVIDIA talking about how it will upgrade its AI accelerators every year. This is going to mean it's going to need more chips. Good news for its suppliers in the Asia Pacific. So a couple of tailwinds here, and the indices are moving higher. We're seeing a gauge of the semiconductor chips in the Asia Pacific also surging more than 3%. Hang Seng is leading the gain. CSI 300 is negative. Let's flip the board though, because I wanted to show you what's happening in India as well, against the backdrop of those exit polls suggesting a landslide victory for Modi. The Nifty climbing to a record high. The rupee, the bonds also in the green, and this is against the expectations of how we're going to get policy continuity as well as more clarity potentially. The Adani Group stocks are those that we're really keeping an eye on. You can see the power one that is outperforming today. Remember, this is the conglomerate that's seen as having business interests most aligned with the policy agenda of the Modi government. Jumana.
Big move up in the Nifty there. Avril, thanks so much for breaking it down for us. All right, well, Saudi Arabia's latest share offering shows investor appetite remains robust. Aramco's $12 billion stake is selling out shortly after the deal opened, a boost to the kingdom as it seeks funds for a massive economic transformation plan. For more on this, Bloomberg's Matthew Martin joins us from Riyadh. And Matthew, I know you've been following this story very, very closely. You were first to break the news on Thursday that the Aramco share offering was actually going to go ahead on Sunday. Well, the books are open, and it seems like they're off to a very strong start. What more can you tell us?
Yeah, good morning. Look, as you say, the order books opened yesterday morning. We're very used to IPOs in Saudi Arabia selling out very quickly, but most of them in the past are a much smaller scale to offerings like this one, this secondary offering of Aramco stock, which is raising around $12 billion. The feedback that we heard yesterday was that within the first few hours of the order book opening, the order book was full. They managed to get enough demand to cover that whole thing. Now, obviously, because Sunday is not a big trading day for the rest of the world, most of that demand is probably coming from regional investors or from the local arms of international institutions. Although we have been told that the book is pretty balanced between international and local demand, but obviously a lot of the international demand from institutions which don't have offices in Saudi Arabia or in the region isn't going to start coming through until today. And I think this is also what we see is probably a big shift from the IPO in 2019, where international demand was very, very weak because everybody was worried about the Aramco valuation. Everybody thought the dividend yield was very, very low. Now when you look at the Aramco price that the shares are on offer for now, look at the dividend calculation, it looks very, very different stock to what we saw in 2019.
Yeah, the dividend yield much higher than some of their competitors in the space. But Matthew, let's talk about the obvious here. Many people are pointing out that this Aramco share sale is happening exactly the same day as the OPEC Plus meeting. To what extent is the price of oil underpinning how investors are thinking about the stock?
Well, obviously, oil is the number one product of Aramco, even though they're on this push to try and diversify and move downstream into other industries and move into being a broader energy company than just pumping crude oil. Crude is still by far and away the biggest product. It still sets the agenda within the company, really, and you don't have to be too sophisticated an analyst just to be able to times production by the average oil price over each quarter to work out roughly what Aramco's revenues are going to be. So oil is still dominating, but I think what we've seen over the past few years, and particularly during COVID, is that Aramco is also prepared. When oil prices are low, it's prepared to go out into the market and borrow heavily to be able to fund that dividend that we're talking about and keep up that dividend yield, partly because that dividend yield is so important to the government, not doing it out of charity for investors who buy the stock on the stock exchange. The government needs Aramco to fund this dividend so that it can keep the wheels running in Saudi Arabia. So even as we see oil fluctuate, no matter how low it goes, Aramco will go out and will borrow and will fund that dividend. What they're trying to say, though, now is that if the oil price spikes a lot higher, then there's much more opportunity for Aramco to return cash to investors. Yeah. So it's a big question for investors as to them taking now a long-term view on the oil price and where it's going to be.
Yeah, Matthew, thank you so much for the overview. That was Bloomberg's Matthew Martin from Riyadh. Now, overseas, Claudia Sheinbaum is set to become Mexico's first female president in a landslide victory. 3 exit polls project that the former mayor of the nation's capital and candidate for the ruling Morena party won between 55% and 63% of votes. Xochitl Galvez, representing a coalition of opposition parties that had ruled the country for nearly 90 years, is seen between 27% and 33%. And South Africa's ruling party has begun talks with rivals to form a government after losing a parliamentary majority it had held since 1994. The ANC won 159 of the 400 seats in the National Assembly. That is a sharp decline from the 230 seats President Cyril Ramaphosa's party claimed 5 years ago. So let's bring in our Chief Africa correspondent, Jennifer Zabazaja. Jennifer, many people are talking about the huge defeat that ANC saw on the back of these elections. How significant of a blow was it?
Right, Jumana, good morning to you. I mean, it was really significant, especially if you put it into the context that you were just mentioning there, what we saw from the ANC back in 2019. So it was really surprising to see that they just got 40% of the support of the electorate. And that's what you're seeing right there on the screen. And the main opposition party, the DA, remains the main opposition party there with just over 21%. And the big surprise here is really former President Jacob Zuma's MK party, just 6 months old, and garnering just over 14% of the vote, largely at the expense of the ANC. It's also been interesting to take a look at just how many voters sat this election out. We were talking about turnout just leading into the election, thinking that it could potentially surpass what we saw in 2019. It actually didn't. It was 58.61%, which is less than the 66% in 2019. And really what this goes to show is clearly the voters were sending a signal to the ruling party, to the ANC, that, after years of economic mismanagement and a lot of corruption allegations, they potentially do, want them at the helm, but want them to be governing with another party, which is essentially what they're going to need to do.
Yeah. And Jennifer, I guess the big question here, two that I can think of is, one, what happens to President Ramaphosa himself? And two, which of the other parties will they choose to ally themselves with?
Right. And because of the support that they got, they have to align with another party. That is the plan. And so we actually did hear last night, Jumana, from President Cyril Ramaphosa, as these questions have been looming about what's next for him. Here's part of what he told us.
What this election has made plain is that the people of South Africa expect their leaders to work together to meet their needs. They expect the parties for which they have voted to find common ground, to overcome their differences, to act and work together for the good of everyone.
Yes, so act and work together for the good of everyone. But the ANC is going to have to make a lot of compromises that they probably were not hoping that they would need to. And the talks are actually going to start today. So we're going to find out in the next few days what the top leaders of the ANC, what their decisions are in terms of who they'll work with. Potentially, would it be the main opposition party, the Democratic Alliance? That would be something that the market would be quite pleased by. But there are some people within the ANC who say their ideologies are too far apart. Potentially, we see some of the other parties then partner up as a coalition partner.
Let's see how this all plays out. Jen, thanks so much for joining us. Jennifer Zawazeja, our Chief Africa Correspondent and co-anchor for Bloomberg Horizons. Well, Indian stocks have rallied at the open of trading today after exit polls indicated a convincing election victory for Prime Minister Modi's BJP party and its allies. For more, let's bring in Bloomberg's Haslinda Amin, who is in New Delhi for us. Haslinda.
That's right, in the blistering heat. I'm in New Delhi. And of course, you talk about those exit polls. That's prompting investor, I guess, euphoria right now. Let's get perspective. Let's get to Sushant Singh for an assessment of what it all means. Sushant, good to have you with us. I'm just wondering, I mean, Modi poised for a third term in government. What kind of government are we expecting? Do you think India will be more muscular within and outside the country?
Yeah, thanks. Thank you. Definitely, Mr. Modi has an unprecedented third term if the exit polls are something to go by. And we are likely to see a very muscular foreign policy, whether it is towards Pakistan or whether in the Indo-Pacific. But it is with respect to China that we should expect a breakthrough. That would be a bold political move because for the last 4 years, India and China have been stuck on the border. There's been a major border crisis that has gone on, which has not allowed India to have any kind of diplomatic engagement with China and putting a lot of pressure on India. Meanwhile, trade between India and China has been very high, and now the Indian government has also allowed Chinese workers to get visas and come and fix machinery and other stuff. Therefore, we should expect a big, bold political move from the government with China. So Modi is likely to meet President Xi next month when he goes to attend the SCO summit at Astana, and that's something we expect. Right. Because we very recently also saw the China post and China post its new ambassador to India after a death. Yeah.
Right. Sushant, we know that Modi wants a supermajority. If he does get it, is it better or worse for India?
There have been questions about the degradation of Indian democracy in the last few years, as you have probably heard, about the treatment of religious minorities, whether it is Indian Muslims or Indian Christians in states like Manipur and Kashmir and otherwise. And if he gets a supermajority, it's a kind of a validation of the policies that he has followed. And maybe his supporters and his government would double down on those policies. And that could really put the Western governments in a dilemma as to how to look at him, as to look at him as a popularly elected leader who's not really following the democratic norms. And that could create some kind of embarrassment, some kind of tough situations, as we have recently seen with the kind of allegations that have been made against his government for the alleged attempt to assassinate, Sikh leaders in Canada and the United States. A more assertive Mr. Modi, a more popular Mr. Modi could probably be, could act in a much bolder manner, much more dynamic manner, putting a lot of pressure on the Western governments as to how they should deal with somebody who's more populist, more authoritarian, more nationalist than what they would want him to be.
So what does it mean in terms of the Constitution? Are you expecting to see changes in the Constitution? What would be his priorities then?
So Mr. Modi the opposition had campaigned on this issue that Mr. Modi's party, if re-elected, is going to amend the Constitution, change the Constitution, or replace the Constitution. Mr. Modi has taken a lot of pains to explain and say no, that he or his party are not going to do away with the Constitution or the concept of reservation in jobs and education institutions for lower caste, for poorer people. But this is something which has always, raised a lot of apprehensions within India. In his previous term, or the current term in which he's still governing, there were two major changes that he brought in the Indian Constitution. One was removing the special status of the state of Jammu and Kashmir, the only Muslim majority region in the state, which he did in 2019. And since then, Jammu and Kashmir is no longer a state. It does not have elected government. It is directly being ruled from Delhi. And secondly, was a change in the citizenship laws. New citizenship laws were brought in, under which Muslims from South Asia were excluded from fast-track citizenship of India, while other communities, primarily Hindus and Buddhists, were allowed to have those kind of things. So those changes have really been.
Sushant Singh, we thank you so much for joining us today. And Jumana, we're coming to you live from New Delhi, where exit polls suggest a landslide victory for Modi, but everything becomes official tomorrow when counting actually begins.
Thank you so much for the coverage out there live from New Delhi. Well, moving on, we are going to talk about airlines, and IATA's annual meeting is in full flight in Dubai as the summer travel season begins. Let's get out to Guy Johnson, who has a guest with him.
I do. Antonaoaldo Neves is the CEO of Etihad. The AGM is about to begin. That's why the bell is sounding. So he's in quite a rush. So let's get straight to it. We've just been hearing about what's happening in India, the Modi government. So let's just start there. How big an impact will the new Modi government? How big an impact will it have on your airline? Is this a good thing for Etihad?
Jay, thanks for having us. I mean, India is doing extremely well. It's an important market for us. As long as we keep having the kind of growth that we have in the region, right? I mean, I think it's going to be great. So we're very excited about the future. We're happy about how things are unfolding in India. And it's an important market for us. We're very committed. We're very happy.
Okay, let's talk about the big question that is hanging over the airline at the moment. Everybody wants to know the answer to this question, and time is short, so I'm going to get straight to it. How close are we to an IPO of Etihad?
I mean, IPO is never an end game, right? It's just another source for us to raise capital. I mean, the mandate that we have from the shareholder is very, very clear, right? Run this company like you're running a company that is listed, that is a public company.
So you're ready for an IPO. So you're already in position.
We're working very hard to make it happen whenever is the time. So
is it a 2024 thing? Is it a 2025?
I mean, that's for the shareholder to decide, right?
But is this something that we should start thinking about in terms? Is this something that you are actively planning for at this point in time, or is this something that is an objective at some point? Are you talking to investors? Are there plans in place? Are those sort of conversations beginning to start?
I'm working very hard to make sure that all the checkboxes that we need to address are checked. So improving the governance, more transparency. We just published our first quarter results for the first time, Q1. We made $140 million in profit, right? So, I mean, the checkboxes are getting there. So I can tell you that, I mean, we're ready. I mean, whenever the time we go.
Would it be a good thing for the airline?
I think it's always good, right, to be able to do that, because you have different sources of financing for the airline. I mean, you open up, for other people to analyze and contribute to the airline. I mean, you get a lot of equity coverage. So that's really good for the airline. Of course, it comes with, a lot of new shareholders, right? And it would come with, I've been there. I did the Azul IPO, right? It's always great to be a private company, right? Because you don't have to disclose as much, and all your competitiveness, ideas are a little bit more protected, right? But when you lease, you have other benefits, right? But you have, to show results to the market, and it brings more attention to the company. So it's in a nutshell, big airlines, they're all listed, right? So
it would be a good thing. Okay. What's the demand picture like right now? What are you seeing? This region is growing really quickly right now, but the airline industry seems to be growing even faster. Is that sustainable?
I think it is, as long as you have GDP growth, right? In emerging markets, every time you have 5, 6, 7% GDP growth, airlines, they grow 2x to keep, current market share, right? So, it's great. We're blessed to be in a region that is growing a lot. GCC is growing a lot. Saudi Arabia is growing a lot. The UAE is growing a lot. India is growing a lot. It's just 3 hours flight, right? Yep. So it's sustainable. I do believe it's sustainable. The UAE has 120 million passengers. I come from Brazil, right? In Brazil, we had only 80, 90 million passengers. Yep. So there's more passengers here today than in the entire country of Brazil. So it's a huge market.
That's a good comparison to make. One of the conversations that I'm certainly having a lot with people here is about turbulence. It seems to be in the news right now. Is that something that your pilots, your crew are experiencing more of right now? How do you manage it? Are you going to be changing some of your protocols maybe to deal with it?
Airlines, I mean, they have to do that. They have to manage the protocols for any event, right? I mean, Etihad is one of the safest airlines in the world. We take good care of all the protocols that we have. The level of awareness when you have situations like this in the industry, of course, it raises, right? Yep. We're pretty much confident that the protocols we have in place are great. We not only use the aircraft radars, right, to understand how turbulences are forming, right? Yep. But we also use today satellite information, right, so that we can deviate whenever we have to deviate. So, I mean, we have to keep improving, and I'm sure that over the next 5-7 years, we're going to have even more data and information to make sure that the pilots can manage that. So, but I'm pretty much comfortable about the level where we are today.
All your peers are going into the AGM. I can't keep you very much longer. Antonaoaldo, thank you very much indeed. Great to see you. Thanks for stopping by to see us.
Thank you very much.
Okay. Antonaoaldo, Neves, the CEO of Etihad. We've got some great guests lined up throughout the rest of the day. But for now, from the IATA AGM, Jumana, back to you.
Yeah, great stuff, Guy. And of course, very much focused on the timing of that potential IPO out of Etihad. Good to see him give not a lot of commentary, but a little commentary when Guy pressed him there. That was the Etihad Airways CEO. Well, Guy has been busy over the weekend. He also spoke to Tim Clark, the Emirates president, who says that air travel demand is strong and he expects growth to continue on into the next decade. He spoke to Guy at the sidelines of the IATA AGM in Dubai.
We're looking at a very strong summer, also a very strong winter. Come to that, we've had a very good year, 23-24. We finished that in March, and we're ahead of where we were this time last year. So demand remains very strong in all the segments, and those new segments I've often talked about that have come to market post-COVID within the old segments are quite interesting, whether that be leisure. The premium cabins being filled with a combination not just of business but everything else at prices that we would never have thought would have been we could sustain at the levels that they have been for so long. And it seems that the more production we put into our markets, both we start Bogota tomorrow via Miami, and we're seeing very, very strong for everything that we do. So at the moment, despite the geopolitics of the troubled world we're in, we've got an Indian election, a Mexican election, the UK election coming up, we've got the American election coming up. Ordinarily, when these things happen, you see demand starting to fall off a little bit. People tend to stay at home, whatever. It seems the reverse is happening. Everybody wants to get on airplanes and enjoy. Maybe it was a result of the COVID.
So the consumer's still in good shape?
Very good. Very good.
And you say business is coming back. That's something that's happening more slowly, but it continues to happen.
No, it's coming back at pace. Surprisingly, but we all said that, Guy. We never believed that business would diminish in perpetuity. There were those who saw a paradigm change the way business was conducted that would remove the need for air travel, etc. We never shared that view. We know what happens when people go and do business, and the more the global economy continues to expand, right? Not perhaps at the rate it was in the 90s or before the global crash, but you're seeing GDP ticking up in a number of areas, particularly in this part of the world. Don't forget, you've got a massive investment program in Saudi Arabia, a lot going on in the United Arab Emirates and the Middle East in general, notwithstanding some of the issues that are going on at the moment. So all this is making demand in the business segments very robust. And of course, Dubai itself is growing at pace. And we're at 6.2 million people here now, and my own forecast is that by the early 30s we'll be at 15 million here. So that in itself generates an enormous demand, passenger segment demand, on an annualized basis.
That was the Emirates President Tim Clark speaking to Bloomberg's Guy Johnson. And some of the other stories that we've been following this weekend, Ukrainian President Volodymyr Zelensky has accused China of working with Russia to undermine a summit to discuss his country's peace blueprint. In a surprise appearance on the sidelines of the Shangri-La dialogue in Singapore, he told reporters that Moscow is doing everything to disrupt the event by using Chinese influence and its diplomats. Zelensky is trying to secure support amongst foreign leaders for the mid-June summit.
More than 100 countries and international organizations have confirmed their participation in the summit for today. At the first summit, we will address 3 points of the peace formula: nuclear security, food security, and the release of prisoners of war. And of course, the Ukrainian children abducted by Russia.
And before we head out, just a quick look at some of the key assets. Of course, I'm reporting from Riyadh today. It's been a major weekend over here with that OPEC Plus meeting. Some of the members of the voluntary cutters were here, including Russia and UAE. The market is seen trading sideways on the back of that announcement. But that was it for our show. Stay with us for more. Daybreak Europe is next.